All right, let's dive right in. Today, March 4th, 2026, was a day that literally split the global financial world in two. We saw a massive divergence, and what we're going to do now is figure out exactly how and why this happened.
And wow, just take a look at this. This table really paints the picture of a split-screen reality, doesn't it? On one side, you've got the US and Europe showing real strength, but on the other, a complete double-digit meltdown in South Korea. These weren't just small differences. It was like two different economic planets today, and we're about to unpack why.
Okay, so here's how we're going to break this all down. First, we'll look at the big picture of this divergence. Then, we'll get into the weeds on why the West rallied and why the East crashed. After that, we'll check out what the data is forecasting for the rest of the month. And finally, we'll wrap up with a concrete strategy to handle all this volatility.
All right, let's get into the thick of it. How does a day like this even happen? We are literally looking at a market that decided to price in two completely different futures at the exact same time. It's a fascinating and pretty wild setup.
And this right here is the heart of the matter. It wasn't just a slight difference in opinion. It was like investors were playing two completely different games. In the West, they were looking past the geopolitical noise towards innovation and strength. But in the East, the focus was on an immediate threat to their energy supply and the shaky ground their markets were built on.
So let's talk about the West. After two really punishing days of selling, what on earth fueled this powerful comeback in the US and Europe? Well, it wasn't just one thing. It was a perfect storm of three key drivers that flipped the entire script.
The analysis really boils it down to these three things that shifted the market from pure panic to seeing a buying opportunity. First, a little bit of hope on the geopolitical front. Second, some rock-solid economic data. And third, that unstoppable belief in the long-term AI story. And you could see the immediate impact in Europe, with gas prices just plunging on the news.
Now, to really get your head around how fast this turnaround happened, we have to talk about a powerful idea called reflexivity. It's a fancy word for a simple but profound concept. In markets, what people believe to be true can actually become true because their belief changes their actions. And this quote from the analysis just nails it. This is reflexivity in action. The story changed from endless energy crisis to solvable problem. That single shift in perception created a massive feedback loop. All the traders betting on a collapse were forced to buy back their positions, and that buying just poured gasoline on the rally's fire.
And you know, it wasn't just about feelings or perceptions. There was hard data to back it up. This number, 56.1, I mean, that's not just a beat, that's a blowout. It was proof positive that the engine of the U.S. economy, the services sector, isn't just chugging along, it's firing on all cylinders. All right, now we have to pivot, and it's a hard pivot, because while the West was rallying on hope and data, the scene in South Korea was, well, it was something straight out of 2008. We're talking about the biggest structural breakdown since the global financial crisis. And this just lays it out so clearly. The contrast is absolutely staggering. On one side, you have de-escalation and confidence, and on the other, a currency collapse, a flood of algorithmic selling, foreign money running for the exits, and a feeling that nobody was in control. A true vicious cycle. And if you want to see what pure panic looks like in a single number, this is it. 60.72. The Causby's fear gauge just exploded. That 8% drop in the morning wasn't just a dip. It was the trigger for an avalanche of forced automated selling that turned into a full-blown liquidity crisis.
And this is so important to understand. We're not just talking about people selling stocks. The analysis calls it a liquidity vortex. Think of it like a financial black hole. So much forced selling happened so fast that it literally sucked all the available cash out of the system. Not just in Korea, but across the entire region, as everyone scrambled for the safety of the US dollar.
Okay, so that was today, an absolutely wild, historic day. The big question now is, where do we go from here? Let's turn to the data and see what the quantitative models are telling us to expect for the rest of March.
So the model is putting a 62% chance on the best case scenario. Basically, if that diplomatic off-ramp holds, the S&P could be gunning for 7,150. But, and this is a big but, you can also see the very real, quantified risks on the table if the geopolitical situation gets worse.
And here we have the specific numbers, the high and low targets for the end of the month. You see the targets for the S&P and NASDAQ, but look at the Kospi. That range is huge. It really tells the story of a market at a crossroads. It could either have a massive V-shaped recovery or stay in a world of hurt.
All right, so we've got the analysis, we've got the forecasts. Now for the most important part, how do you actually trade this? How do you build a strategy to navigate this kind of chaos?
The game plan here is super clear. It's about playing both defense and offense at the same time. You want to protect your portfolio from the worst-case scenarios, but you also have to be ready to capture what could be a huge rebound in the AI and semiconductor space.
And it's all broken down into 4 clear steps. First, you've got your sound money defense with Bitcoin and gold. Then you play offense with the physical AI leaders, and then you have 2 really smart tactical plays. One betting on a bounce in Korea, and another playing the long-term shifts in global supply chains.
And for anyone looking for the nitty-gritty, the report lays out some very specific levels to watch. We're talking precise entry zones for NVIDIA, a clear stop loss. And check this out. The trigger for the Korea trade isn't the index level, it's the currency. Once the Korean won gets back to 1,450 against the dollar, that's the signal to watch for.
And this quote really brings it all home. The big idea here is to completely reframe how you think about today's chaos. Volatility isn't the risk, it's the price you pay to get in on the next big move. The report argues this isn't the end of anything, but the start of a whole new and potentially very profitable chapter.
So, we're left with this final, really powerful question. The market isn't just a bunch of individual investors anymore. It's this giant, complex swarm. So the real skill, the million-dollar question is, how do you tell the difference between a temporary panic and a real fundamental change in direction? That's the challenge, and hopefully, today's analysis gives you a better map to navigate it.